So I'm gonna share my screen real quick. All right, welcome. We are going to be talking about apartment complexes and passive investor opportunities and risk. I'm excited tonight. It'll be the fourth Monday of every month where we get together and where we're building relationships. Last 15 minutes, we'll keep it up to networking, getting to know each other, and then we go into the topic, and then we open up for some Q&A and just casual conversation. We've been doing this for about 2 years now, and it's just been our way of giving back and educating people that are interested in the space, learning about passive investing. But what we try to do is cover, what's working in today's markets, where operators are seeing pressure, lessons learned from active deals, and obviously, key thing is protecting downside and shifting cycles as shown on this slide here. 7 o'clock we start and we go into networking. 7:15 Central Time we go right into the presentation, and then we have some open strategy Q&A discussions afterwards. A little bit about myself. I'm Wayne. We have been growing CREI Partners since 2019. We've got 100 million assets under management and development, primarily in Texas, but we have some assets in Alabama and Louisiana. Our bread and butter is multifamily, value add multifamily. I would say 80% or so is multifamily apartment communities. And then we have about 20% or so into other asset classes like RV, boat, and business storage. We have a build to rent community. We have a office retail. We're also doing developments in Bryan College Station with a multifamily, an office retail, and actually a hotel. So, but our bread and butter, as I say, is multifamily. Prior to CRI Partners, I worked with CBRE, a large commercial real estate company, for 16 years. And yeah, just was eager to start my business and grow it. And here we are today. Shelby, who's on this call as well, she leads our investor relations for our portfolio. She's been with us over a year now, and really has picked up and enjoyed the aspect of getting to know our investors on an individual one-on-one basis, helping with K1s and making opportunities come available for certain investment life cycles. So there's a few people that have joined this meetup for the first time, and so excited to connect with y'all afterwards and get to know. And also, this is going to be posted on YouTube and such, so there's going to be people who are maybe interested. So always like to introduce Shelby on our team. We have other team members, senior portfolio manager, an institutional partnership person, a marketing, and starting in July, we'll be having a analyst on our team as well. So we've built out a great company structure to take care of our investors and pipeline. So for those that are wanting to know exactly what we do, I try to make it very simple. I mean, we raise money to buy assets. We acquire those assets. We execute the business plan. We distribute returns, and we implement exit strategy. So that's a very high level, very simple, but we do all the work. I know someone, on this call has their own rental properties, and as someone who's had rental properties on my own before, it's like a lot of work. And but we handle all the triple T's, tenants, termites, and tenants. And so as we go and we find opportunities, we implement the business plan, we distribute capital to investors and exit when the time's right. So just a few slides. This is going to be pretty high level, and then I want to get off the slides and really just have further conversations. But we have really doubled down on apartment investing over the last several years. It was, well, several years ago, I would say probably 2021, 2022. It was extremely hot asset class. Everybody was, you know, buying, focusing on it, and they were getting very frothy. A lot of people were overextending themselves on the debt, taking out bridge loans, a lot of variable rate loans. And it was just, I was doing offers and people were outbidding me by, 1 million, 2 million or more to win the asset. And the whole idea was, the market was just going to continue compressing with cap rates, interest rates, and all that. So what we have done always is been very strategic and conservative in buying properties, um, with the preface that like everybody needs a place to live. Like when I worked with CBRE, I dealt with office, retail, industrial. I like those asset classes, but from a multifamily standpoint, when things get tough in the markets, whether it was a COVID pandemic or recessions, people always need a place to live. They're first to vacate their office or industrial space or retail. But at the end of the day, people need a place to live. So that was like why, number one, why I personally like apartment investing, because like no matter what the cycle is, people need a place to live. The other thing is like there's a lot of supply in certain markets right now. So as people were moving to Sunbelt states, it really pushed the developers and to start developing, apartments. And so right now we're seeing a lot of supply in the market. But eventually, over the next 2 to 3 years, if you believe that like these areas are going to continue growing, which we do, that will also the supply will be eaten up, right? And there's not going to be a lot of new supply coming on because a lot of things have tightened up. So personally, why apartment investing matters to me is it serves a need. We have ability to take care of a community. People have a place to live. But on the financial side, it provides cash flow. And cash flow was what allowed me to go on a 9 month RV trip, and just get back, last week. And because we had the cash flow, there's long-term equity growth. Um, there is diversification off Wall Street. Now, a lot of people are doing extremely well, including myself, on stocks. And, we're seeing those great returns. But we also know that that's not a forever thing, and there will be a correction. And, investors like myself who are long term, like I don't really worry about it as much. But a reason I don't really worry it as much is because I have cash flow from the properties that we own. So, but diversifying out of Wall Street, I think, is important. Creating access to larger assets through syndications. A lot of people, I could tell my kids this, and we go up to, we were in Destin a few weeks ago, and I was taking my son out to Best Buy and explaining to him like that retail center, it's owned by, a partnership that has multiple investors. Now, whether it's a REIT or a LP type structure, whatever it is, it's likely not one person that owns that property. And so we can do that because there's syndications, right? And we can diversify, even wealthy people diversify their investments by not putting everything on one property. They spread it through other properties and do what's called a syndication. And that's really just pulling money together to buy properties. But it doesn't, require understanding both upside and downside, and that's a big purpose of our meetup. So, discussion points here, why apartment attract investors, passive investing basics, income and cash flow potential, appreciation, equity growth, risk in apartment investing, sponsor and operator importance, and what investors should evaluate. So, this is a lot of discussion points. It's going to be very high level tonight. And then I'm going to get off the slides and we can, have some really good discussions. But, we talked about, well, we didn't really define an apartment complex. So an apartment's anything like 4+ units. So, what I love about like this is one of our properties in San Antonio, Stratton Park. I can be, 40% vacant and still be able to pay our debt service. You can't really say that. Like when I owned that rental property, a long time ago, when I was in the Marine Corps, that rental property, when I didn't have a renter there for 6 months, like that was a non-paying asset for 6 months. Where these apartments, I could have 128 units, and of the 128 units, no one wants to be 40% vacant. But you get the point where there's enough cash flow to pay debt service and all when you're buying right, and you don't really stress about that one-off person that, when we have a vacancy. And that's a big part of this demand for housing. It remains consistent. We focus on growth markets. And so part of those growth markets do have a lot of supply. I'm acknowledging that, but that supply will tighten up and it will turn into a that demand will tighten, right? And it's all because there's not as many new permits coming. We talked about multiple units, reduced vacancy, can produce both income and appreciation. I think this is a big piece here is, as we push income, whether if we think about every property as its own business, and you got income and expenses, net operating income, and this is before the debt service, but the net operating income, if you're able to increase expense or increase revenue, decrease expenses, or do a combination of both, like you're increasing net operating income, which you're forcing the appreciation, which is you're forcing the value of the property. So the higher the income, the higher the value of the property. So this is one thing I really love is that income approach. And it's not just buying a property and waiting 5 years and hopefully it, has appreciation. So from a passive investing, basic standpoint, passive investing is those that are listening to this to me right now or a recording. Like the passive investing, like a lot of that work happens before there's a deal. So if you're new to passive investing or, experience and just trying to meet good operators, what you're doing in that due diligence phase is like that's the hardest part of your investment cycle. Because once you've evaluated, you're educated, you're sophisticated on, how to evaluate a deal and meet a sponsor, et cetera. Then when the opportunity comes, either it works for you or you don't, from a timing standpoint, you're investing, and then from there, you're doing what you enjoy on your day to day while we handle the day to day operations with our on-site management teams. So us as a sponsor, and there's a lot of other sponsors out there, but from us as sponsors, like we have a senior portfolio manager, we'll have an analyst shortly, but we have on-site management team, and so we can execute the business plan for us, so our investors don't have to. And then we all benefit from professional day-to-day management, and that's the on-site property manager. So we'll talk about a little bit about this income and cash flow, but cash flow is the income remaining after property expenses. As I sort of illustrated earlier on a prior slide, income minus expenses is net operating income. And so what we're going to do is try to increase that net operating income by adjusting the levers, which is the income and expenses, which will allow us to pay quarterly distributions on as I mentioned, on a quarterly basis. But strong operations support stable income. So as occupancy strong, cash flow, people are paying their rents. I mean, it's not, nothing of this is easy. So I'm not saying like, oh, we can just get the occupancy up to 95% and we're going to be cash flowing. Like it's constant, you know, collecting rental income, et cetera. There's a lot of work to it, but through strong operations. And I like that this is in here because it's a really important aspect to passive investing. It's just making sure your sponsor and your team has experience with this operations aspect. So occupancy and collections drive performance. Cash flow depends on disciplined asset management. So this is all part of the operations piece that's important. We've also talked about this a little bit. Appreciation is the increase in a property's value over time. I always like to say a forced appreciation is when we drive the net operating income as high as possible. And so we're not just waiting for the markets to, increase over time, but it's more of that forced um, appreciation. So there are risks in apartment investing. A big risk that I've seen lately over the last few years is, people investing with sponsors that just don't have the experience or the time to fully dedicate to the investment. Sometimes they, and I had another job too, but I was in commercial real estate and I was, juggling both my real estate investments and, my day job with commercial real estate. But understanding like who the person driving the day-to-day decisions, I think is extremely important. Majority of our stuff at CRI Partners, like we are the decision maker, we are the ones driving the day-to-day operation. But there's not a right or wrong to it, right? There's great partners out there who have really great relationships with operators. It's just for you as a passive investor, understanding like who really is making the decision, what experience, good or bad, do they have? And I think that will help you assess, the risk on it, right? So don't assume that if somebody brings out a deal that they're really the decision maker, right? And again, there's not anything right or wrong to it. We have a lot of partners who join our team who are raising capital, assisting with asset management, et cetera. Um, but it's just understanding who really is making the day-to-day decisions. Looking at the underwriting and just treating, most people that are investing in these deals are accredited high net worth individuals. Like if you're investing, your last 50,000, like this is good for you to learn, but this is not the asset class you should be investing in, right? This is, over time you're getting them into alternative investments, um, and you're looking at diversifying outside of, Wall Street and your 401k and your Roth IRA, and you're looking to diversify out. Because so at that point, I mean, you'll have a lot more understanding of a business, right? So income, expenses, profit, and just like with any business, if we have unexpected expenses, that can impact cash flow. And so understanding like the reserves, what happens if, there's the one-off expense um, that will happen because there's always something that happens. These are, 80s, 90s, 2000s product, something's going to happen. And they're being lived in, right? So understanding what the reserves, what their budget is, none of this is rocket science. It's really just understanding what the business plan is, what's their, concerns on, you know, reserves or capital plan, and just evaluating for yourself if it makes sense, like they have things covered. Not everything's going to go as planned either. So understanding like what's their communication like, are they, providing, at least quarterly updates, um, so that, people know what's going on with their properties. So we talked about the sponsor and operator importance. I think this is huge. It's the jockey on the horse. Um, Understanding their experience, both good and bad. Like if they haven't had a black eye, then they haven't been in real estate long enough. Like this business is one that you will get hit multiple times, and that's okay. I mean, you get better and more sharper each and every time that you get hit. So, having an operator or sponsor just share, good and bad stories. Like I think that's just part of, them opening up and being transparent about their experiences. So I think that's huge. Communication during both strong and difficult times. Can they show you, an investor portal and show, the communication being sent on a regular basis? I mean, obviously, downside protection is important too that you want to hear. But ultimately, the execution matters. So how are they going to be able to execute? What team's in place? If you're partnering with somebody who has another full-time job, that's fine. But understand like who on their team, on the general partner team, is really running, day-to-day point with the management company. And so, what investors should evaluate, just a couple more slides here. I think the first and foremost is the sponsor. So I think that is, when things get tough, good or bad, whatever, like the sponsor is got to have a lot of grit, a lot of communication, got to be able to trust that person. Um, the market, so a lot of times they just say, look at your backyard. And a lot of people live, on these calls and all in markets I wouldn't invest in, and that's okay. You can be like, hey, I'm not going to invest in this market, so I'm going to learn about other markets, right? But if you are in areas like Texas, the Sun Belt area, like I feel like those are pro real estate, pro landlord states with a lot of job growth and such. So maybe invest in your own backyard first. Um, Understanding the business plan, assumptions. And there's a lot of technology. We've talked about this on other meetups where, even like Google Earth, like going in and just scrolling in on the property. Are you seeing a lot of pawn shops? Any gas station with, bars outside the window? Certain things, right? They can just give you an idea like, hey, is this a good area or not, without having to fly in and see. Um, but after you review the market, business plan, assumptions, property, understanding the fees, the debt, whole period, if this again is, your last 100,000, $50,000, and that's locked up for 5 to 7 years, like, is that going to matter to you, because it does, the days of, like, holding a real estate investment 2 years and getting back 100% return. I mean, that was just a short period of time. The reality is, it's a long game. It's, a 5 to 7 year hold at least. And so you got to have patience with, having your capital held up that long. And then what can go wrong and how risk is managed. You want to ask that from the sponsor and look at the deal. So I'm going to stop sharing my screen, but check us out at cripartners.com. There's a lot of information on there with podcasts. We've got monthly blogs. There's a lot of Q&A. So huge information. And then check out Building Passive Income. This is a daily podcast that we've done. That's also added like an AI element to it. So it's a pretty cool podcast that's reviewed by us, and then CRI Colin rolls with it. He's turning into a famous um, investor education guy. It's pretty cool to see. And then of course, Facebook, Instagram, YouTube. So I'm gonna stop sharing and really just see what questions are from the group. And feel free to, like, you can put it in the chat box. Oh, I forgot toilets. You're right. So it was tenants, termites, and toilets. I think I said tenants twice. Great,
Yeah.
great catch. Yeah, I was. So yeah, any questions? And if not, what I'm gonna do is I'll turn off the recording because some people just don't want to be recorded. So you can either put, message in. Um, all right, so what I'm gonna do is I'm gonna stop recording. For those that are listening, if you want to email Wayne at cripartners.com, again, Wayne at cripartners.com, we'd love to have the conversation and like just build the relationship. And hopefully this sort of wets the mouth a little bit on, investing passively. And then for those that are on the call, I'm gonna, uh, you know, stop recording and then hopefully have some great conversations after.